Green numbers flashing, red numbers crashing, people screaming on TV, fortunes made in a morning and lost by lunch. From the outside, the stock market looks like pure chaos. A casino where rich people gamble and somehow always win. And because it looks so confusing, most people never touch it, and quietly stay poor because of it. But here's the truth almost nobody tells you. The stock market is actually one of the simplest, most beautiful ideas humans ever invented. And once it clicks, really clicks, you will never look at money the same way again. By the end of this video, you'll understand exactly what a stock actually is, how prices really move, why the whole market keeps rising over decades even after brutal crashes, and the one thing that confuses almost every single beginner and quietly costs them money. That last part is the difference between people who build wealth in the market and people who get crushed by it. Welcome to Jecob Finance, where we break down investing in a simple way. But first, a quick disclaimer. This is not financial advice. Now let's get into it. Let's start at the very beginning, because everything else builds on this one idea. Forget charts and numbers for a second. Imagine your friend Maya starts a small sneaker company called Apex. It's doing well, and Maya wants to grow. Open new stores, make more shoes. But growing costs money she doesn't have. She has two choices. She could take a loan and owe the bank with interest. Or she could sell small pieces of her company to other people in exchange for cash. She chooses the second option. So Maya slices her company into, say, 1,000,000 tiny equal pieces. Each piece is called a share, and when you buy one of those shares, something powerful happens. You don't just have a number on a screen. You literally own a tiny slice of Apex. You are now a part owner of a real business. That right there is what a stock is, a share of ownership in a company. That's it. Everything else is just details. Now, when a company sells its shares to the public for the very first time, that event has a name you've probably heard, an IPO, an initial public offering. It's simply the day a private company opens its doors and says, anyone can now own a piece of us. Maya raises the money she needs, and thousands of regular people now own a piece of Apex. Everybody wins. But this is where most people get confused, so pay attention, because here's where the market actually comes in. Let's say a year later you own some Apex shares, but you need cash, so you want to sell them. And somewhere else, a person you've never met thinks Apex is about to explode and wants to buy shares. How do you two find each other? You need a marketplace. And that is all the stock market really is. The stock market, the New York Stock Exchange, the NASDAQ, is just a giant lightning-fast marketplace that matches people who want to sell shares with people who want to buy them. Here's the part that surprises everyone. Once Apex has sold its shares, the company usually isn't even involved anymore. When you buy a stock, most of the time you're not buying it from the company. You're buying it from another investor just like you. The market is millions of people all over the world trading tiny pieces of businesses with each other every second. Which brings us to the biggest question of all. Who decides the price? Because a stock doesn't have a fixed price tag. It's changing every single second. So how? The answer is beautifully simple. It's an auction. A live, never-ending auction. Let me show you. Meet two people. Buyer Ben wants Apex shares, and he's willing to pay up to $100. And seller Sarah owns shares and will sell, but only for $101 or more. Right now, no deal. They're $1 apart. But then some good news comes out about Apex. Suddenly, Ben really wants in, so he raises his offer to $101. Sarah accepts. Boom. A trade happens at $101. And just like that, the price of Apex is now $101 because that's the last price a buyer and seller actually agreed on. That's literally all a stock price is. The most recent price someone was willing to pay and someone else was willing to accept. So now you understand why prices move. It's pure supply and demand. When more people want to buy a stock than sell it, buyers compete, they bid higher, and the price rises. When more people want to sell than buy, sellers compete, they drop their prices, and it falls. Fear and excitement, buyers and sellers all day long. But here's the deeper question. What makes people suddenly want to buy or sell in the first place? And this is the single most important thing to understand about the market. A stock's price isn't really about what a company is worth today. It's about what people believe it will be worth in the future. When investors expect Apex to grow, earn more, and win, they buy now to get in early and then the price climbs. When they fear it's in trouble, they sell, and it drops. You are never really buying the present. You are buying a bet on the future. Now, here comes the catch, the thing that confuses almost every beginner and quietly destroys their returns. If prices are based on the future and nobody can actually predict the future, then in the short term, the market isn't driven by logic. It's driven by emotion. by fear and greed. One scary headline can make millions of people panic sell a perfectly good company. One exciting rumor can send a worthless one to the moon. The legendary investor Benjamin Graham said it best. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. Think about what that means. Short term, the market is a popularity contest, driven by emotion, hype, and headlines swinging wildly up and down. But long term, it's a scale. It slowly, reliably weighs the real value of actual businesses. This one idea explains almost everything. It's why a stock can crash 30% in a week, even when the business is perfectly fine. And it's why, over years, great companies almost always rise no matter how much they bounced around along the way. So how do you actually make money from owning a piece of a business? Two ways. First, the share price goes up and you can sell for more than you paid. That's called a capital gain. And second, if the company shares its profits with owners, you get paid just for holding. Those are dividends, and I've got a whole video breaking those down that I'll link for you. Own good businesses, and both of these can work in your favor for decades. But here's the question that trips people up. If the market is so emotional and crashes so often, why does it keep going up over time? Why has it made so many patient people wealthy? Because behind all the noise, something real is happening. The economy grows. Companies invent new products, reach new customers, and earn more money every decade. More people invest, more money flows in. So while the market zigzags violently in the short run, booming in bull markets and crashing in bear markets, the long-term trend for over 100 years has been up and to the right. A crash isn't the market breaking. Very often, a crash is simply a sale. The problem is, most people do the exact opposite of what works. They get greedy and buy when everything is expensive and everyone's excited. Then they panic and sell when everything's cheap and everyone's scared. Buy high, sell low. The most expensive mistake in investing. The real skill isn't predicting the market, it's staying calm when everyone else loses their head. So how does a normal beginner actually get in on this? It's easier than ever. You open an account with a brokerage. It's free and takes about 10 minutes. But here's the good news. You don't have to be a genius who picks the perfect stock. Instead of betting everything on one apex, you can buy a tiny piece of hundreds of the biggest companies all at once through something called an index fund. And yes, I've got a full beginner's guide on those too. You start small, you invest consistently, you ignore the daily noise, and you let time do the heavy lifting. So let's bring it all together. The stock market isn't a casino, it isn't magic, and it isn't rigged against you. It's simply a marketplace where you own tiny pieces of real businesses. Prices are just the latest agreement between a buyer and a seller betting on the future. In the short run, emotion runs the show and prices swing like crazy. But in the long run, real value wins. The market weighs what companies are truly worth. Understand that one truth, keep your emotions in check, and think in decades instead of days. And the stock market stops being something to fear and becomes the most powerful wealth-building tool ever created for ordinary people like you and me. If this finally made the stock market click for you, let me know down in the comments. I read every single one. And if you want to learn the smartest, simplest way to actually start investing in it, that video is waiting for you right here. Thanks for watching, and I'll see you in the next one.